So why don't we now talk to Jennifer Livingston, who is kind enough to kind of share her experience. And let me just tell you a little bit about Jennifer. Jennifer is a Senior Vice President, Managing Director at Union Bank. Union Bank out of San Diego, California is one of the largest lenders in the country. They're number 4 in the wholesale side. Jennifer has a unique background, similar to actually myself, where she was in operations and has been in sales for a long period of her career. So she knows this issue quite well, and we're very pleased to have her kind of share what works in correcting the issue. So Jennifer, not to put you on the spot, but why don't you talk about a little bit about how this issue has impacted your firm?
I would say probably the biggest thing that has affected our company has been that for many years there was that silo. There was the pointing fingers between sales and operations, and it was having a lot of challenges.
So, Jennifer, what occurred with that? In other words, when you saw the challenges, was it production number challenges, or was it that you were doing customer focus groups and people were telling you about that?
Well, there was a lot of problems that we were having, but it wasn't necessarily just about the communication. Anyway, we were having very large production numbers, and in those large production numbers, to the point that you had about the quality of the packages going in. So we had to put a lot of emphasis towards our quality packages from our originators. One of the other things that we did that really started helping the silo effect is the dedicated teams. We found that by dedicating a processor to a larger originator or a team of processors to a group of originators where the relationship could be formed. The relationships were so important in being able to stop some of that finger pointing back and forth, because then everybody was working towards the same goal. And we also have recently opened up where our processors are actually having more communication with the borrowers, but it's presented as a team concept. In other words, when the mortgage consultant is talking to the client, they're saying, hey, I want to introduce you to my team. My team is my assistant, my team is our processor, and you're going to be hearing from each of us that will be needing different parts of this package to put together to make this a really seamless customer service for you.
Right. So when you did this, in other words, what was sales' reaction to the assigning of a processor? Was there hesitation on their part, or was there, that makes sense, or was there fighting on operational side that they didn't? Why don't you talk a little bit about how, that's a change, and that's a pretty significant one. How did the people react to that?
Well, it was twofold. We had those that were very excited about the change and very excited about the opportunity to have a processor that they can get to know and that they can really work with. Because in some of the smaller companies, you have a processor that works directly with the mortgage consultants or the loan officers in their offices. When you get to the larger operations, you don't have that luxury as much. There's more of a centralized processing feel. So you have those good originators that were afraid to let go. In other words, they were afraid to have somebody else that was possibly going to be dealing with their customer other than themselves. You had some of the personality conflicts that you referred to. You have to make sure you're putting the right teams with the right originators. In other words, if you've got a team of people that specializes in doing low, moderate income lending, FHA lending, they may not be the best team to work closely with your originator that is doing $1 million and above loans. So that's something that has to be paid attention to, and that top-up concept that you were referring to earlier is very critical, because whoever is leading your sales from the very top of the bank and whoever is leading your operations from the very top of the bank, they need to have good communication between the two, because it has to come from that top down so everybody really believes in that this is our goal, this is our mission. We want everyone to work together as one big team. This is the bank. We are presenting the bank. We're not presenting sales. We're not presenting ops. It's about everybody all together.
So was there a gap between, let's say, at the top of the bank in this issue, or did they just recognize it had gotten too out of hand and that they needed to do something?
I think it was recognized that it was getting out of hand because we were growing so fast. We went through a period of time where we were hiring a tremendous amount of originators. Our volume was growing substantially. We were, making new inroads into new products and things like that. So I think it was at that point. I don't think that anyone was turning their heads on it. I think it's going, oh my goodness, we really need to focus on this.
Yeah.
Because it truly is all about the customer and the way that the customer is perceiving us. We've had the fortunate ability that we have been, ranked as one of the top banks in reputation. So we wanted to maintain that and make sure from a loan standpoint that our customers were feeling the same thing. So it did start from the top up, and our top managers, way up in executive management, were saying, yes, we agree. We need to do something about this. We need to pay attention to this, and we need to do whatever it will take. And it's certainly not perfect, and we're constantly tweaking the model. But a lot of the things that you brought up in regards to, having the meetings together, that's important, and not just from the managers. So it's not just about the sales team meeting with the operations managers. It's about the sales team and the operations team, the processors, the underwriters, and also making sure that what you referred to about the processors and the underwriters, they need to be paired up correctly, because you can also get the underwriters pointing fingers at processors and processors pointing fingers at underwriters. So that is an issue just as well as sales pointing at us. So
right.
All address the issues that need to be addressed.
Right. No, that's a really great point. That it's not. It can be, and I certainly have seen it where underwriters are pointing at the processors for sure. So, now talk a little bit about this issue. I mean, so let's say that management's is aligned with the common front. But what happens did you lose people when you installed a different approach, which was the way you assigned people to the sales side? Did people not like that, and or let's say they resisted it? Did you see that? So the managers at the top were in sync, but the folks below are not.
We did have some of that, and it goes back to your mad dog concept,
right,
where you have some of your bottom originators or your folks that aren't paying attention to their quality, and then a processing team that may be assigned to them or processors that are assigned to them would basically throw their hands up and say, wait a minute, I do not want to be dealing with this person. They're making my life miserable, and then you've really got to do some adjustments. You've got counseling and coaching that needs to be done, as well as you've got to look at, sometimes you have those really good performers, meaning a lot of numbers, a lot of production, but they're not necessarily the best person at dealing with the operations people. So we've had circumstances where you've had to take a really good loan officer from a production standpoint, but they were not very good at dealing with the processing staff, and we've put an assistant in between there. You have to look at it sometimes on an individual standpoint. You can't just carte blanche say, okay, all the loan officers in this area have to report to this team, and this is the way it's going to be. You have to be flexible to know that the bottom line is, what's the customer experience going to be? And if you've got the wrong people working together to try and create that customer experience, then you're not solving the problem.
Right. So how do you handle, and I certainly see this with some of my bank clients, where when they're recruiting someone to be a loan officer at the bank, and the reality of it is that how they go through a sequence to match the people up. I mean, it sounds like it's pretty much from a product expertise, but is there a communication component that comes into play that you guys use?
Well, it's not necessarily just from a product standpoint, although that does play part into it because of where the person's expertise is in an actual product, which is important to be able to know what you need in a package and so on and so forth. But the other part of that issue is that the manager, so sales manager, the person that is responsible for those loan officers, and the operations manager, supervisor, who is responsible directly for those processors or underwriters, depending on how you're putting the teams together, that they work very closely with each other. We have found that when we have our sales managers that have very close relationships with the processing underwriting managers that they have some of the most effective teams because they're talking to each other. They're saying, okay, we're having an issue with this particular loan officer, or we're having an issue with this particular processor. These are what the issues are. These are what we need to do to address it. So those communication lines really can make or break the whole thing, because you've got to have the top-down buy-in to it. But if you don't have the people that are working directly with these salespeople, processors, underwriters, any of your operations people, the assistants, it's not going to be effective. We have to make sure that there is that really strong communication. And we actually know all of our sales managers have at least a weekly one-on-one, if not daily, with the manager of our operations teams so that they can be discussing these issues. They can catch them before they become a problem. So it's about the communication between those folks. And our operations team also has put a lot of our processors and our upfront setup staff through some customer service training. So we felt that it was important enough for them to start gaining some of those skills that we did provide that type of training to our operations staff, which we found was very effective. It helped a lot of our operations staff to get better in their customer service skills.
Right. I mean, I would say that's one of the phenomena that is more recent. When we look at that, processor position is now being asked to communicate with borrowers on a much more active method than they did in the past, which translates into really hiring a different type of person. It would be for sure an issue where you're talking about, just because they're experienced, that may not translate into what currently you're looking for. And the personality traits for the processor is definitely changed. And we see that in our own research. But Jennifer, why don't you talk about the performance standards? So to make the communication effective, did you install certain hours that you were allowing the originator to talk to ops, or are you doing the scenarios? How does that work with you?
Well, different teams were implying different concepts. We had some of the processing teams, depending on the volume of production that had a certain calling hours. We also had some of our larger producers who had a set time throughout the week. So they had a couple of days during the week that they would talk with their processor, they'd go through pipeline review, and then their assistants also had specific times that they would be talking to processing. Now we have had, we open up our underwriters to our loan officers as well. It's one of the unique things that we like to do is we like to make sure that there's open communications between our underwriters and our loan officers.
Right.
And that had to be managed a little bit more tightly. Those we put in more specific hours, and more importantly, we've had dark hours. In other words, there are certain hours throughout the day that no one is to call the underwriting teams because we want to make sure they are focusing on the underwriting. That a lot of the communication that we've instilled between underwriting and sales is that underwriting will reach out to sales when there's a question. So rather than, probably just a good example of that is an underwriter who looks at a file and says, not really happy with this one, just going to deny it, rather than there being that discussion. And those discussions between our underwriters and our salespeople have done a lot to save a lot of transactions that may have otherwise just ended up on the bottom of the heap somewhere. So it's really important that our underwriters and our sales staff are all fighting so hard for that customer, because that really is the bottom line. We want to make as many loans as we can to the customers and make sure that we're figuring out ways that we can make it work for that customer.
So how
that works, and then specific time slots where it's better for sales to be talking to operations, depending on whether it's processing.
Right. So, in other words, how did sales react to now you can't, I've been in some companies where, the originator's like hanging over the desk of the underwriter on a transaction, and this goes on all day long. So how did sales react to this issue of now you're going to have your dark hours and so forth? How did that go over?
Well, I will say that there were definitely some that felt that, oh my goodness, how can we do this stuff? What if we're with the customer and we need that underwriting or the underwriter right now, those types of things. But instant messaging was utilized sometimes, the underwriters, and it was something that everybody's going to have a certain set of rules. There has to be some rules that everybody plays by. So everybody may not be so happy about it, But in the long run, they're going to find that they're going to be more productive, underwriting will be more productive, processing will be more productive, and it's a matter of there's just certain things that need to be done in order to keep everybody on the right path. If an underwriter was answering their phone all day long, then the other 5 files that they were working on aren't going to get touched, and then somebody else is going to be frustrated. So you've got to have certain rules in place so that that underwriter is not having to spend all day on the phone, that the processor is not spending all day on the phone. But again, it gets back to the communication between the sales managers and the ops managers, that they're discussing, okay, we've got Joe Smith over here, for example, working on this team, and he calls the processor 10 times a day, asking the same questions over and over again. That is a management issue. That is a coaching opportunity for that sales manager to work with that salesperson saying, hey, let's figure out a better way to do this, and for both of those sides to work together. Because if they're not communicating, that processor is going to get more and more frustrated, the loan officer will get more and more frustrated, and then you take the chance that one or both of them is going to say, hey, I don't need this anymore, I'm going to go somewhere else. And we want to keep our good employees. We want to keep them working and feeling like they're making an impact on what they're doing. And when you start getting frustrated people because there's no communication, that's what's going to happen.
So how do you, I mean, from the issue of like scorecarding, do you actually scorecard for the relationships on the originator side with the ops side, or in other words, is it just kind of ongoing?
Well, the scorecards that we do for our salespeople really pertain to production, types of production, pull-through, all of those type of things. So what we are instituting, we did for a while and we're getting it going again, is a customer service survey that really gets to the bottom line of all of this, which is the customer experience. So
right.
There is not a specific scorecard per se that's going to monitor how is the loan officer doing in regards to their communication with processing and vice versa. That is more of a management system that each manager of each team is using as they're tracking their coaching and their development of those particular employees.
Well, when you put on, I'm going to put my ops hat on now. I mean, when you talk to operations people, the biggest complaint they have about the salespeople, and in particular it turns out to be the mad dogs, is that the salespeople don't know the underwriting guidelines. And so a lot of things that are presented as a possible deal really are not. So how do you I mean, what is your experience with that, and how do you kind of address that issue?
That is so important.
Right.
We have found over and over again that the quality of that package going in, if you've got a loan officer that is not, and we have very specific checklists, follow this checklist, this is how your file should look. And then a file gets into the system and it is not. So from that operations standpoint, the operations team is going to say, wait a minute, how do you expect us to get this done in this period of time when we are getting in all of these files that are not well put together? So it starts from the very beginning, and we put a lot of emphasis with our loan officers. I mean, this is such an age-old problem.
Right.
It's going back, over 30 years this has been discussed, that a loan officer needs to take a complete 1003. They need to get a complete picture on their client. They need to do a full cover letter explaining what the circumstances are. And for those loan officers that do that, they don't have these kind of issues nearly as much as a loan officer who basically is just, taking garbage and throwing it in, which, I hate to be that blunt about it, but unfortunately there are those loan officers out there that's exactly what they do. And then they expect operations to jump through hoops and create miracles for them when they didn't even ask the simple questions on a 1003. So it does go absolutely both ways. And we try to emphasize so much to our loan officers about the criticalness, and we are putting steps into place where we're going to be able to monitor it more carefully. Our technology is getting better, so we can monitor the quality packages better from, literally from a system standpoint, so we can start being built into scorecards and things like that, because the quality of that upfront piece really can make the rest of the system go so much smoother.
So have you gotten to the point where, let's say you have this checklist, and actually it's interesting that you say that because Strathmore has done studies, and a basic issue of having a checklist is a significant driver of the customer experience. But I guess my question is that, let's say the checklist isn't completed correctly, so does the upside start in that loan at all, or it just doesn't make it to even be considered?
Well, those are some things that we're looking at right now. We did have a point, because of the customer experience, you can't just stop processing a file. Something's got to happen. But those are immediately brought to the attention. There is a report that basically will state this is quality versus non-quality.
Right.
So there are steps being put in place, but no, we don't stop the process for that customer. It just makes it much more complicated and therefore starts bringing up the problems. So,
right.
It'd be great if it was as simple as, okay, this is a crappy package, we're not going to do a thing with it. But again, bottom line, and I can't emphasize this enough, it's the customer experience. We have got to be there for that customer, and be it a good answer or a bad answer, we've got to move quickly through that file and be able to give them the right answer.
Right. So what happens, like, let's say the originator who does this is obviously continuing to do this. So is that a termination issue?
It can be, absolutely. If we've got an originator that time and time again is turning in very poor quality packages, that is part of their counseling. And if you've got someone that is doing it very, very poorly all the time, yes, that can be an offense that basically the manager will then start reviewing every single package before it goes in. And we try to do that for our new employees just to give them a good start. All of our sales managers will review a certain number of packages of their new employees, regardless of their experience levels, to make sure, because we have unique products, we want to make sure that they're understanding what goes into our products to hopefully give them that foot up so that they are doing the right thing. And those that aren't doing the right thing are counseled on it.
Right. One of the things, and it does really kind of trigger a couple things that I've seen over the years that has worked, and of course it's really up to the lenders, but it's almost like for originators that ask for, pricing concessions as an example. So if you do that, then what triggers is, has this person gone through training of what is a pricing concession? Likewise, the same issue, ends up being if the person's not putting up the files in the right way, that triggers an intranet training component where they would have to read certain parts of the underwriting guidelines. I have to say that certainly what we saw over all these years of talking to top originators that, they know the guidelines. So what you end up seeing is what I would call these C players or mad dogs, is they really don't know the guidelines and want other people to step into the plate. Have you gotten to the point where, is that really what happens when there's a series of these that, they go through what you're calling, I guess, a counseling session?
It does go hand in hand. We've got, it does go hand in hand with that. There are those loan officers that if they don't understand the underwriting guidelines, they are not doing a good job packaging. They are not understanding the pricing as well. So we're ending up, that they're requesting pricing exceptions. And if it is a situation where 2 or 3 times within a certain period of time that they've had to come for a pricing concession because they have made an error because they didn't understand guidelines or they
Right.
didn't understand how to read the pricing, that is definitely part of what would go into counseling for that particular person, as well as, that has a significant impact on the sales manager as well. So
Right.
they're going to make darn sure that, they're trying to get those type of folks under control because it affects everything that they do as well.
Right. Yeah, that's an excellent point, and really it should be another topic for one of these monthly webinars, because too often I see originators asking for concessions when, frankly, it really was tied to they didn't really understand, basically the underwriting guidelines, and that leads to, really a training issue. And one of the things that I've done with clients where And I think it's a good practice, although, people are aghast when we do it, but to have, every Friday that a part of the underwriting guidelines where people have to read certain sections and then they get tested on them, so that the people are understanding, what should be, what's permitted by the investors. So again, I see a lot of it where, there is a lack of understanding of what is permitted, and therefore ops is looked at as like the last stop and trying to correct it, which really, leads to all kinds of problems. So Jennifer, if you had to share with everybody today, I guess maybe the 2 or 3 things that makes sales and ops work well together and addressing the silos issue, what would be your suggestions?
Well, first is definitely you've got to have that agreement from the top of the house that this is important to us. We want sales and ops to work together, and we're going to do what we can from the top of the house to make sure that everyone knows they've got the support to do that. Mm-hmm. Secondly is the communication between the management teams of sales and ops, and I'm talking right down to the supervisory level, to the branch sales manager level, to regional manager level. Everybody needs to communicate. We really highly, we have a monthly sales ops call where literally it's all of the operational managers, all of the sales managers, they all get on a call together, they all go through, hash out issues, go over things that are coming up in regards to some changes. And what's really wonderful about that, when you open up those lines of communication, then operations will go, wow, that is a good idea, let's try that. Or sales will go, you know what? I like that. Let's try that. So the open communication really can solve so many of our problems when everybody's talking to each other, sharing ideas, and open to trying new ideas. It's right. Not, so many of us have been in this business for so many years, and people say, oh, well, that's the way we always did it. Well, we can't continue doing that. In this business, especially over the last 15, 20 years, we've got to really look at what are some of the new ways we can do this to make it a better experience for the customer, to make our operations people happy so we don't have turnover there, to make our sales people happy so we have less turnover there. It's about keeping good employees, keeping them productive, and bottom line, making that customer happy.
Great. I mean, they're all great practical tips for sure. Is there any questions for Jennifer? If you could use the chat feature, we'll be able to tap into some other comments. Jennifer, there's one more that I want to ask that people are asking. So again, this issue of when, let's say, ops or salespeople resist, how does that practically work, especially if the person's been with you for a long length of time and they don't want to talk to the salesperson? I mean, how do you handle that?
Well, and we certainly have those circumstances where we've got people that just don't want to deal with the processor. It's a trust issue. Really, a lot of it boils down to a trust issue. We found that. So we've had to do some really close one-on-ones to the point where we will take that loan officer that's having that resistance, their sales manager will go, and they will meet face-to-face with that operations group. We have the great opportunity that our operations centers are located throughout the state and the area. So for the most part, our loan officers can physically go to that operation. It's not like that operation's on the other side of the country. So they can go and sit down face-to-face with those people, and they have to start building trust. Even if it's just to the point, hey, you made a comment, take them out for a beer. Let's go out. Let's have some dinner. Let's chat. Right. Let's realize you are a really good person. I'm a really good person, and let's just try to work together because we're all here for the same end. And there are times where we've discovered after doing that, hey, this just isn't going to work, so we need to think of another way to do this. So you can't be so close-minded as to say that you are going to work with this processor is going to work with you, and the salesperson is very resistant. You try everything you can. There's just certain things that sometimes you need to tweak it another way. Or we've, in a couple of circumstances, had the assistant of that loan officer be the one that's really the spearhead. The loan officer felt that they really didn't have that confidence, so the processor and the loan officer assistant would work very closely together, and they would do a lot of that customer contact that maybe the processor would have done. We don't try to encourage that. We really want to make sure everybody's working as a full team. But, sometimes you have to do something a little bit different in order to make sure that things are still flowing smoothly.
Right. Well, that's another great point. But I certainly appreciate, and I know everyone on the call appreciates your really insightful comments. I mean, this is an age-old problem. You're for sure correct about that. But I think going forward, the customer experience is so critical for companies that they really do have to address it. I know that Jennifer would love to, certainly have you connect with her through LinkedIn. So certainly do that, and certainly if you have any questions for Jennifer, certainly let me know, and I'll be glad to forward them to her. So Jennifer, thanks so much.